following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' music means it's time once again for the old Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I'm joined today on the old all-star panel by the refugee himself, the man who survived the Great Quake of 2012, none other than the Rock Lobster, beaming in all the way from the damaged, indeed destroyed state of Maine. Andrew, first off, how was that horrendous experience? I'm surprised you lived to tell the tale, sir.
Oh, well, let's see. I was probably one of three people on the San Francisco trading floor in the, the 89 earthquake then. So I survived that earthquake. It actually was pretty scary. I did survive this one. The earthquake in 89 actually was so big that another guy I was on the floor with, a technical analyst, this guy Tuli Schnitzer, he ran across the floor while it was still shaking. And he says, holy, S-H-I-T, Andrew, this is a big one. And the building was still shaking as we were hitting the exit. It was like a 3-second quake or something, which in earthquake time is very, very long.
I can imagine it'd be pretty scary to be down on the floor then with all these monitors and things dangling over your head.
Yes,
not
they
exactly.
Were creaking.
That's a precarious place to be in the middle of an earthquake, I would think.
Plus, the entrance to the floor, the old floor, was between two buildings. So the buildings separated during the quake and slapped together. So all the stuff that was kind of connecting the buildings, these walkways that they built, sort of all became disconnected. So it was kind of like okay, now we got to jump from building to building. So it was, the main earthquake, though, I'll just say I survived after growing up in California. Earthquakes.
Sounds like this one was not as traumatic for you and the folks as there was out in San Fran back in the 80s.
Yes, exactly.
And we are also joined on the old program by, I believe, the good folks over at OX. Who do we have on the line today? Is it one John Grigus?
Yes, welcome.
The man, the myth, indeed the legend. How are things over in the land of OX?
Surprisingly, I overstaffed, hearing some feedback from the clients about the wait times. And so I overstaffed, paid overtime, took people from other departments, trained them for 3 weeks since September expiration, and it was probably one of the slowest ones we've had in a while. So
isn't that always the way?
It's always the case. I mean, I had training people from cashiering, from new accounts. They're all licensed. They've done it before in the past, and I had people spending, working double shifts, overlapping. Well, here we go. It was quiet.
People were upset about maybe just the weekly expiration and people dialing in every week, or just regular expiration, or what were they complaining about?
No, I mean the monthly one is the big one. So they were complaining about calling at 3:59, and I had 30 seconds left to place the trade, and I had to wait over 45 seconds for you guys to pick up the phone. And I don't like to place trades myself, and I shouldn't have to wait. So they're complaining about the wait times, is what I'm saying.
The reasonable expectations of the client. I want to call it 2:59 and put my trade in and have it executed.
My average wait time for August was 25 seconds. I mean, tell me what corporation out there has a wait time less than 25 seconds
to get
immediate service.
I know. It takes you longer to get a hold of the phone company. I had a call for some business attire reasons today to Land's End, and I was on the hold longer than that, and that's certainly not a pressing, time-sensitive matter. So there you go.
Do people that are OX customers know they're getting like full-service help for like discount prices? Does that ever dawn on anybody there?
Not at all, and I really have spent hours on the weekends trying to come up with a way that I can tactfully present that to the client and let them know they're pretty much, most of the people here have floor experience. Most of them have 4 or 5 plus licenses, 10, 15, 20 years of experience. We'll sit on the phone for an hour at a time and charge
$15 trade. Yeah, and $8.95. I mean, it's
There you go.
With a smile.
I'm just saying. But hey,
get your values worth. Get your values worth, OS customers. Call up with John and chat with him for an hour. Get that money's worth. Get that bang for your buck.
Yeah, I'm going to do a webinar titled "Really."
You should call it "Don't Call Me."
No, I'm a pleasure to talk to on the phone. Except when it comes to risk, a firm risk.
All right, and with the team assembled, we can dive into this very intriguing and perhaps curious trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, where we break down the day's worth of activity. And, we had it all. Well, the day closed 0.0% unched on the S&P, but that really belies the activity lurking underneath today. We had it all written up, ready to go into the show earlier this afternoon with pretty much a pronounced sell-off across the board. And when I turned on my screens again to get ready for the show a little while ago, there we are staring at a sea of green. So we saw a pronounced turnaround towards the end of the day to move most of the major indices into flat or even a little bit up on the day. So a very, very dramatic turnaround here in the old broad markets. Mr. G, Mr. Andrew, what were you guys? What's your theory as to what drove us to the upside so late in the day today?
Oh, my theory? I just think there's no. What's the
conviction?
Easy? There's no conviction one way or another. It's funny. I was talking to Mark. We're gonna post a blog. Look at the period for right before Apple, the last Apple earnings cycle, when like the market was kind of gloomy because the Greece thing was gonna have, they're gonna have this Greece vote. Nobody knew what was going on. People were kind of freaking out, and basically the Apple or everybody was just waiting for the Apple earnings. It's like you can't say that that's what's happening, but that was the feeling that I got. And if you look at what happened in the market right afterward, the volatility dropped, like 3 points. So at the time it was like 10, almost a 20% volatility drop in the VIX. Right after Apple reported, the market rallied really hard because it was like a relief rally. It's like, okay, everybody's just about ready to put their money back in. Then Google kind of messed everything up. Now they freak out again. And that's basically, I think, what we have. We've got a couple of days of this probably chop back and forth where there's no real conviction. The earnings are a little disappointing from the revenue side, but honestly, I don't know why that's a surprise considering everybody thought that Europe was going to blow up all summer long. I mean, how much spending are you going to do if you think the Eurozone is going to collapse? So the fact that the sales are actually what they are, I know the analysts ratcheted down a lot of this, but I don't think it was too much of a surprise. So the market's certainly not at near its highs. It's come off a little bit. So I think you're going to see this back and forth until some of these leaders kind of claim some leadership, and that's sort of where we are right now.
And I heard some interesting theories earlier this year expounding upon why they thought we're seeing these dramatic swings in the major indices right towards the end of the day, and they were thinking that it stemmed from the options market and from a large universe of these ETPs we're always talking about around the S&P, in particular maybe some of the VIX ones as well, that are just by the nature of their construction, whatever they are, whether they're levered ETPs or ETFs or whatever the case may be, they're just by design are essentially heavily short gamma all the time. And so that large amount of short gamma really drives them to make some of these hedges right at the end of the day when they're trying to, how it is when you're short gamma. You don't want to pull the trigger until the very last minute when you have no other choice. And so a lot of these guys are perhaps waiting till the end of the day, and then they're hedging that short gamma, which of course would drive us in the other direction. I thought it was an intriguing scenario. I mean, it's hard to say that's the sole driver, because then we have days like we saw on Friday when we were down substantially and we didn't see the short gamma really kicking in to drive us the other way. So it's hard to say when that kicks in and when that doesn't, what the movement is.
I mean, we were looking at iron butterflies all last week, put on at the beginning of the week. We had what, a 1.5% drop, and the flies were still up money. And that was the old at the money strike. So they were pricing. I mean, part of what we've been telling, we're trying to teach people about how options are priced, or are they pricing some kind of move or are they not? Because we still had like a 9% relative vol market. It's just not, except for, we haven't had really those killer down days that really drive that out of the money options up that, pump the VIX up. And it was pricing these type of moves in. So, and I think also, too, a lot of those vol ETFs are starting to crinkle out and die. I mean, look at the TVIX and some of these other ones.
Yeah, I mean, they're
totally
so poorly constructed. Yeah, so that's probably one of the reasons why these movements are so dramatic. Some of these ones are so poorly constructed, they have no choice but to put on these massive hedges at perhaps inopportune times. So it was an interesting theory. I've heard it bandied about a few times since then. I think I subscribe partially to it, perhaps on days like today when the movement is less extreme, and then the gamma could kind of kick in and bring us the other way. And on a day like last week when we saw a pronounced sell-off, I don't think that's really going to have much of a I mean, obviously the gamma is going to be important, but I don't think it's going to be able to overturn the massive momentum we have in the broad markets. But on a day like today, perhaps where we're vacillating around, trending down, but not extremely, that perhaps that could kick in. An interesting theory. I still have, like I said, I have to research it a little bit more. But from an options perspective, it's certainly interesting.
Decent one though for that. Because and another thing too is VIX October to November future cash almost trading for the same price today. And December was only like 60-cent premium to cash. Normally you see that kind of, near backwardation when the VIX is trading 43, not, 17. So I that's kind of one of the things where I think the volatility market's like, okay, we pretty much probably have priced in what we need to price in. Unless we have, market Armageddon again and, a major currency decides to drop off the face of the earth. So I think that's part of, and things when it's that thin, when there's no real future premium, it's a lot tougher because they weren't letting those futures get too far away. And apparently somebody's, in order for, I think, the future premium to stay that tight, somebody's on the offer there. They're like, I want to be short the volatility here, and if I can't go sell the options, I'm just going to go whack the futures, and I'm going to drive it down. So I think there is something to the vol products possibly being adjusted and sort of maybe keeping a lid on the higher volatility. So
speaking of,
I think,
good.
I think that is a plausible part of the story in this market.
Yeah, who knows? Yeah, that's of all the theories I've heard, that's probably one of the more interesting ones. There's a million different theories for why we do this end of day madness. But it's interesting. You mentioned iron flies in Microsoft, and I had an interesting experience with that last week. Of course, we had Microsoft earnings during Earnings Palooza there on Thursday, and Microsoft has always been one of the more reliable premium sales going into earnings. So I took an interesting flyer on that one with a nice iron fly, one of my trades of choice, as you know, here on the show. And I took it off post earnings. It worked out fairly well. And I decided, because it was running a bit, I decided to leave those 28 half puts, the long portion of it. Decided to leave that one on in case it ran. But I also joked on our show on Friday, the Vol Views show, that, of course, that was a pure signifier that it would never break the 28.5 strike. And sure enough, I was right on Friday. Of course, today, Microsoft was one of the names dragging us down for the most part, down about 2.5%. Was trading south of the 28 handle for quite a while until it rebounded towards the end of the day, like everything else, closed at 28 even on the day. But that's an impressive amount of movement post-earnings for a name like Microsoft. We haven't seen that one really.
And I don't see where the news, I'm on the closet. I think the Surface product and all the other stuff is going to be a big boom for Microsoft. It might not be right now, mostly because my little 3D experience I had at Acumen right before Option Pit when we were developing, which actually a product's coming to market. But I can see now what, if there's ever that kind of really rich Minority Report application or software now available, if a Surface tablet can run it, any laptop can start to run this sort of rich touch functionality, because there really is no real applications yet to take advantage of the power of graphics hardware. And Microsoft moving to the Surface operating system, to the touch screen, kind of think Minority Report. I mean, I know it sounds a little bit, spacey and out there, but I think they'll be just for one of the first times in a while, they'll be a little ahead of the game with this. There's no software to take advantage of, but their operating system will. So
now, I think as a product, it's very interesting. I think they undercut themselves a little bit, probably intentionally, with their pricing, making it such a comparable pricing level to the iPad. I mean, obviously, it's more of a horsepower, more powerful beast than the iPad if you compare it feature for feature. But the iPad is the 800-pound gorilla in the room. If you really want to make inroads into that, you have to undercut them, even if it hurts your margins in the near term. But I know a lot of Microsoft's hardware partners like Acer and others complained when they announced they were making their own device that they were undercutting them. So they seem to have priced it a little bit higher just to give their hardware partners a little bit of wiggle room, and that in turn undercuts them directly because now they're hurting a little bit. But still, it's an interesting product. I agree with you. It's worth when they come out. Of course, they say right now they're quote-unquote sold out, which could only mean they made 5 of the damn things. Who knows? But that's the oldest strategy on the planet. Oh, we're sold out. I mean, Amazon's been doing that forever with the Kindle. They don't release any numbers, but we're sold out. It's a best-selling item we have. We sold 8 of them.
But everybody, you think about the companies that have the great ecosystems. There's everybody talks about Apple. Everybody talks about Google. Facebook will probably get on at some point when they figure out how to monetize their billion users. But Microsoft has, 200 million people that use their products, at least 200, 300. If they could actually get them to upgrade stuff because it's super cool, nobody's factored that into the pricing of Microsoft at like 9. It's a 9 PE stock with how much? I think they could buy themselves back right now with free cash flow in like 7 years.
I don't know. They paid a lot for Skype. They could have put that towards buying themselves back if they wanted.
What do they do with Skype? Where is the functionality in their product?
Aside from making it great for us to use here today, I really don't know. I haven't seen much in the way of Skype improvements over the past almost a year or so.
Why didn't they buy it when it was only like $1 billion? Why did they pay? What did they pay? 20 or 8 or something?
They paid 8.
Like that?
They paid $8 billion for it. They could have bought it back for pennies when eBay was trying to dump it. It was one of those things that just kind of speaks to the Johnny-come-lately run to do whatever they need to do Microsoft strategy. Of course, they bought a Quantive. That was a disaster because Google bought DoubleClick, who was the leader in that space. And then Microsoft, me too, we have to buy an ad sales platform too. Let's buy this one no one's ever heard of. Oh, and let's write down how many 7, 8 figures they've written down on that sale since then. So they do a lot of these Me Too type things. But you're right, they have that core ecosystem that they can develop on it and perhaps come out with some competitively priced products. When they want to and they put their minds to something, they can make something interesting like the Xbox, even though that product had some early stumbles where essentially all of them were broken. But they got past that pretty quickly by essentially putting in a stealth recall for that product. Be interesting to see how they compete on this. I heard an interesting throwaway number from an analyst. I usually discount analysts and those types of things, but this one stuck in my mind. They had mentioned something, and I haven't verified these numbers, so they could be out of whack, but they were saying that right now, Microsoft, the dominant name of the 90s, they were getting broken up by the government. They were so powerful. If you could have named a company in, the mid to late 90s that was the most powerful thing on the planet, you would have easily have said Microsoft. And now fast forward to today, and you have a situation where essentially the iPhone, it might have been the iPad, one of those two, I forgot which one they said. I think it was the iPhone. The iPhone alone accounts for more revenue now than all of Windows. and just what a flip-flop we've seen in the world over the past decade or so, where Microsoft has essentially been stagnant for the past decade, riding those monopoly coattails, whereas this little hardware company that was on death's door is now one device alone makes more money for them than all of Windows, which was the quintessential monopoly not too long ago. So interesting stat, I thought. And it could be completely nonsense.
People move to new devices.
Exactly. People are moving to new platforms, new devices, and Microsoft playing catch up. I think my favorite Microsoft analogy is back probably in the mid-'90s or so when Bill Gates wrote his famous book, The Road Ahead, Predicting the Future. Wrote about all these different things, blah, 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 blah. You know what was missing from that book, The Road Ahead? The internet. Never mentions it once. So here he is paving the road ahead from 1995 onward. Never mentioned a little thing like the internet, which was, of course, the driving technology boom that changed everything. So that's kind of Microsoft in a nutshell for you right there. A little bit late to the party, but they usually have the resources to do it. I don't know if this time they have enough resources. They certainly have a lot. But if they have enough in the tank to really make such a great 180. Windows 8, huge change. The phone's kind of flagging right now. I don't know really. It's an interesting one. That's why I wanted to trade them, obviously, going into earnings. But interesting
That's
one.
That's why I was looking at the no. It was hard because the volatility's in like the mid-20s.
Yeah. You had to really you had to really leg into it to get some decent levels out of it.
Yeah, I mean it's not, but it's still for Microsoft. It's not like selling 18 volatility. I mean, it's not.
Yeah, it was the first time.
All you're going to get is a good entry price.
Yeah, and it was the first time in recent memory that I can recall Microsoft even being remotely interesting from a vol level going into earnings. Just because so many times they've underperformed, there's no vol really going into their earnings. So the last few, they've actually had some movement. So this is one of the few times where an iron fly actually looked attractive for me going into Microsoft earnings, whereas previous months I've just written them off as being a meh. And that usually was the case. I hate to bring this up on the show because I don't want to encourage the type of behavior, but I know, Andrew, you're a degenerate premium buyer. And we were talking last week on the show about AMD and what a crazy company that is and how they had earnings coming out, and they were trading around 270 or so at the time, I believe. And it seemed interesting, or maybe 250, something around there. And or maybe 270, wherever the range was, somewhere there, 270, 280. And before earnings last week, I looked them over again after we had been talking about them. I decided to take a flyer on the 2.5-3 strangle. It was a pittance. It just seemed like it was such a great trade for such a nominal amount of money to actually put something out there. Because it seemed like AMD has moved a bit in recent earnings, and sure enough, trading 210 today, closed out around 220 or so on Friday. Yeah. So that actually was. I hate to encourage nonsense flyer strangles, but that's exactly what it was. It was. It wasn't a significant investment or trade for me. It was just a nonsense flyer that I wanted to put on as essentially a scratch off lottery ticket, and that's kind of what it became. But it was pretty funny.
Sometimes things are so cheap that they're not flyers anymore.
Yeah, they're just it's essentially a commission. That's what it is. But yeah, it was just funny that I put that on. Like I said, I hate to even bring it up because I don't want to encourage nonsense flyers from our audience. But that was just a fun one that it seemed so ridiculous, and it was so absurd that it paid off. I had to just bring it up. I was watching it. I was like, oh my god, I had actually forgotten I put it on. And I looked at it. I said, oh wow, what is this? What is this little bump? Oh wait. I forgot I have that strangle sitting there. So that was kind of a fun one. Of course, coming up, we'll talk about it later. We have Facebook and a few others. Mr. G, your big holding, good old Groupon, not exactly lighting up the old tape. You have to turn it around somehow, John, because I can't hear Sebastian going on about his 1x2 put spread in Groupon anymore. If it keeps going his way, we'll never hear the end of it. So you got to turn it around somehow. Keep buying, do something.
Off the hook for Zynga.
Yeah,
exactly. It's not looking good at all. I mean, it's just not looking good. Hey, I'm holding out to they got earnings, I think, on November 8th. So we'll see what happens.
That's a big assumption they'll still be around by November 8th. But hey,
I should have pulled the trigger. I was going to start writing calls against it, and I was just waiting for one day for it to pop. And if you look, 1, 2, 3, 4, 5, 6, it's like down 7 days in a row. So my hesitation cost me some premium, but. Yeah, that's going to be my crap or get off the pot time. Is those earnings plummet the stock, and it closes below 5, I'll have to get out of the.
Just collar it like 4 or 5 collar, and then whatever happens, you're done with it one way or the other.
Yeah.
And then you're out of it and you're happy. You got in at 501. There are worse things. Not
much skin in the game, but still enough to make it interesting. So.
Yeah, but I just for the sake of quieting Sebastian, we got to do something there.
Yeah, I haven't been on
'cause
the show with them in a few
listeners
weeks.
want this. I know. They love to hear this. I really think that's what they tune in for, actually.
Yes, our broken trades. So they can
Well, it's
feel
always nice to
a
see
little better
people
about
in the business
themselves.
lose money on a daily basis. Too,
Yes.
You know, then
Yes,
they know
exactly.
they're playing the same game.
Speaking of Andrew's favorite holding, good old Zynga has earnings 24th, a couple of days. So before our next show, we'll have a chance to talk about them post earnings.
They
Yeah,
still
but
gonna be
my
around for
earnings
that, or?
I don't know. I think
Yeah.
my earnings trade, though, is I saw the Zynga, the 2-level puts were only like 13 cents in there a couple days ago in January.
Oh, I was going to say that they're much cheaper now, but yeah, January. Okay. Yeah, that's
Yeah,
actually. Yeah, they're trading 14 cents now. That's not a bad flyer if you think this thing's going the way of the dodo.
And I had them. I saw them for 11 cents, and I'm like, you know what? Because they have no good news. Nothing that they're doing is working. I'm like, geez, Louise. So anyway, now what? Is it trading 232? Oh man. Yeah, 12 cents was my magic number. And it's usually I get sidetracked and it starts.
Buy those two
dip
puts.
down.
Buy those two puts. Finance it with the 2.5-3 call spread, and then you're done. There you go. Done and done.
I'm looking at him again right now. I'm like,
Andrew's pricing it up as we speak. Well, while he prices it up, we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the old odd block, and we're going to kick things off with a name that's a newcomer to the odd block. This is MGIC Investment Corp, ticker symbol MTG. This is an investment corporation that's a holding company that owns a bunch of private mortgage insurers throughout the U.S. And what we saw today was essentially this name closing about unched $2 and $2 and some change on the day, usually doing about 3,000, maybe 4,000 contracts a day, which is a lot for this name. But today, lighting up the tape with about 22,000. What we saw was a massive call spread, essentially gobbled up here in MTG, MGIC. Don't fall into that trap. That's a different name. And we saw the Jan 2013 2.5-3 call spread, and they lifted that one on the offer quite a few times. Total of looks like about 10,000 or so on the day. About 10,000 or so of this 2013 2.5-3 call spread, and they lifted the offer for about 17 cents. They paid about 133 vol for the 2.5 strike, and sold the 3 strike for about 117, so relatively high levels of volatility for this name. There is some open interest, about 6,000 contracts and 2,000 respectively, but not enough to cover this trade, so the bulk of this is indeed open and new bullish positioning. This, of course, is a substantial premium to the typical ADV on this name, just a few thousand contracts. So interesting upside love here. Of course, this one's so low. This could be a lot of different things. Someone's looking at some relatively cheap deltas here, looking to spec to the upside here in MTG. Looking at a chart of MTG, it's not exactly a bad trade. They were trading well over 3 just back in July, and then, of course, it gapped down back in August 1st around earnings, August 2nd, when they gapped down south of 2 to 1.25 actually. So and actually they did get south of 1. They were trading 85 cents not too long ago back in August. So this one's had a substantial rebound over the past few months, and someone's specking that rebound is going to continue through January, specking on some serious upside here in good old MTG. Andrew, this is a nice cheapie. I'm thinking this one's right up your alley.
Yeah, isn't this hasn't this appeared before on the show? This name, like one of these like funky little mortgage companies. It's one of these stocks that was trading like $900, before the 2008 financial crisis.
The name does sound a little familiar. I'll have to go through our notes. It could be. We had one. You're right. We had one mortgage company. I'm not sure if this was the name or not, but we did have one a while back, and I'll have to go research it and see what the status of that one was. But this one
exactly. During the financial crisis, this was a $70 stock.
There you go. That just goes to show you.
Gigantic dividends.
Yeah.
No more.
Gotta love the mortgage business. 85 cents it was trading a few months ago. So there you go. $70 to 85 cents.
And I don't even know if I don't think there's splits, but as late as 2010, mid 2011, it was about a $9 stock. So, I mean, there is some recent history on it, coming back and getting back to the fold, so to speak. But
yeah,
just,
a lot of love here for good old TWX. So perhaps not that outlandish of a flyer after all, this upside call spread here on good old MTG. Next up on the old odd block, we have Lilly, of course, Eli Lilly, ticker symbol LLY. This is the one that's been running higher, actually been faring fairly well over the past few months. Got a new yearly high that it hit last week, closed today, down about 1% to 52.28. It trades about 30 or so thousand contracts of late a day, which is a lot for this name. Only about 20,000 today. But despite the run the stock has seen of late, someone really thinking this run's going to continue. They're diving into the Jan 55 calls that were they lifted the offer 10,000 times here. These are very, very near out of the money calls for about 85 cents. There is about 13,000 open on this strike, so this could have been a closing position. It doesn't look that way, though. Like we said, this is a sizable trade for Lilly, usually doing around 20 to 30,000 contracts a day, doing 10,000 just in one clip. A substantial amount. This is about a 19 or 20 vol they bought these calls back on. So an interesting trade here. We'll have to make sure tomorrow if this is indeed closing paper. I might have to wager that it is, given that this is the only real sizable strike. This and the Jan 50s are both open here, about 12 to 13,000 contracts. But either way, it's an interesting trade here. Someone closing out a short or picking up an opening long that someone thinks there is some upside perhaps left here in good old Lilly. And that's going to do it here for the old odd block. And now we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, where the boys over at OX take the reins. And today, Mr. Grigus, Mr. G himself, is going to talk about something other than Groupon here that's letting up his personal tape over at OX. So, Mr. Grigus, take it away, sir.
No problem. Yeah, like most traders, I only talk about my positions when they're in the positive or going my way. So since Group N's been down for the last 7 trading days, we'll just put that aside in the back burner for, when it goes in Sebastian's face. Just a couple of random things on the desk. For your techies or technical traders out there, if you take a look at Bank of America, sometimes, we have people that trade fundamentals, people that trade technical charts. It's a bull flag that you have in Bank of America, one that's doesn't get much better than that. Now, whether it's going to happen and it's going to continue to the upside for Bank of America really depends on the next few days. But a lot of people like to look for certain, technical indicators, and there's a nice one in Bank of America. So if you are one of those people, keep it on your radar for the next week. It does look like it's going to try for a breakout and try to get through that 10 spot. This is the 3rd time we've been up there in the last 6 months. So hopefully this will be the time for it to hit to the upside. Not that I'm a big fan of financials, but I do like it when I see something that looks at fundamental, technical. Sean did run in here with his tweet. He wanted me to let everyone know that today the Dow fully erased a triple-digit loss for the first time in 10 months. I actually was kind of out of the market for the second half of the day and did not know we were actually in the green. Pretty nice to see that the market was able to come back from, I guess it was down, 135 at its low. So it's good to see. That's usually a bullish indicator as well. Related to what Andrew and Mark were talking about at the beginning of the hour on the tech side of things, we have a few announcements coming out from some of the big players in the tech industry. Everyone on the desk and on the phones is talking about the Apple Mini that's supposedly supposed to come out this week, or at least the pricing, as there hasn't been much indication of that. But most of the tablets out there that are in that 7-inch range are going anywhere from $199 to $249. So anticipate that Apple with its premium logo and fanboy status will probably be in that range, to slightly higher. Another product coming out, which I think is very neat, it is the Samsung ChromeBook. Obviously, Chrome is the browser for Google. This is interesting to me too. That when I read the article, they had a Google or Samsung rep that said, most people in their house have 3 to 4 to 5 TVs, but they only have one laptop. As your children get older and your family gets bigger, more people are on the internet. More people need, products to surf the web to get work done. A tablet is not always ideal for maybe like a student or someone who's taking their work home and trying to get stuff done before, their meetings the next day. This tablet, or this laptop of what it is, coming in at a price point of $249. So a full keyboard, full screen, weighs, I believe, just around 2 pounds. And what they're saying is that it's more similar to a phone, or the internal workings are, than actual laptop. There's no moving parts. There's no fan. It has the same processor as the tablets and phones that Google has out there and Samsung have out there right now. So it should be interesting to see. I believe they're going to announce that this week as well. It'll be interesting to see how that does for Samsung and how it does for Google after it slid last Thursday. I believe Mark was referencing, or Andrew and Mark were both referencing Microsoft trading 9. Where'd you say its PE was, Andrew?
I think the PE, if you back out the cash, is like under 9, like 8. So it's probably a 9 PE stock right now, trailing PE.
So they have their tablets coming out, but also their new operating system. And one of the other articles that I caught was the new operating system. This will be the first time since Windows 95 that the business side will actually need to train front-end users on how to use the OS. I guess it's that big of a change. The start button is now gone. It's basically the touch screen to operate on a tablet or a cell phone, and layered over a laptop or PC. So it's kind of interesting to see how that's going to roll out. I mean, I like Microsoft too. I think it's a good trade to buy, sell some puts and take the stock and go the old KYO selling calls and buying puts collar situation.
The triple income strategy.
Yeah.
Triple income strategy.
Other than the tech side and Bank of America, the commodities have, saw the sell-off that we saw in the equities as well. If you've been to the gas prices, gas station lately, prices are down around $3.50. Oil is sub 90, and it continues to look like it's under some pressure. We'll have to look at those inventory reports on Wednesday at 9:30 and see if that's going to continue. I think that'll be the catalyst, because it looks like inventory will be up. I've heard consumption is down about 1% month over month. So there's a lot going on. We have definitely got earnings going on as well. Apple was up $24. As you know, that's 13% of our daily volume at Options Express is Apple. I mean, it is an index of itself. So anytime you get a move like that, the calls are usually great, because people love to buy bull call spreads and just wait a few weeks. So it was a positive day on the desk all around.
Sounds like a crazy one over there. I joke with some of the guys on some of our other shows that Apple is indeed an index unto itself. They take umbrage to that comment, I think, but I maintain it, because it certainly is. When it has days like this, Apple could be up 24 points. The rest of the market could be unched completely, and you would have a crazy day over there, I would think, at good old
absolutely.
OX.
Absolutely.
So interesting stuff. Yeah, I'm kind of curious about the Windows 8 stuff myself. I don't know if I want a pure touchscreen OS on my desktop. I suppose.
Well, it's not a pure touchscreen. It's a combo. You can still use your mouse.
You can get rid of the. Oh yeah, you can use your mouse. I'm just saying, but the UI is all geared towards touch, and there's no start menu. You have to actually do some tricks to kind of disable that front end UI if you just want a standard desktop. So they're going all in on this touch thing, which is interesting from a tablet perspective. I'm not sure if I want that running. That's my front end for my my desktop when I boot it up. I don't know. I haven't played with it yet, so we'll have to wait and see on that one. But still, Microsoft, an interesting trade right now for a lot of reasons from an options perspective. Well, thank you for that, John, holding court as usual on the old Xpress Block. And now we're going to close out the old Xpress Block and dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we talk about what's coming up, what's on our collective screens for the next few sessions, and we're going to kick things off. Of course, there are some earnings to talk about later this week. We talk a lot about Facebook here on the old show. Facebook announcing tomorrow after the close. They had a bit of a rally. They were hovering south of 19 for a while there, going towards the end of last week. They rallied a bit today, closed up nearly 2%, or about 32 cents, closed at 19.32. So hovering around that 19 strike. It'll be interesting to see what happens tomorrow going into the earnings, if Facebook gets a serious rally or not. Andrew, you still loving Facebook these days? Or I know the synthetic Facebook didn't work out. Maybe the real thing will be better for you.
I know it's funny now. I just yeah. Do I still love? I think Facebook at a $19 price is a pretty reasonable number. For I don't think I think all these companies haven't quite figured out how to do the mobile thing yet. And when they start, I don't think you're paying a lot for the billion eyeballs. So I like. The idea for me is like selling like 18-16 put spreads, anything like that. When Facebook's down around the 19 handle, I think you sell those thingies. So,
of course, right now, being a degenerate fundamentalist like you are, they're trading at a 106 PE, even at this 19 range. So that's not exactly a scream and buy from the fundamentalist perspective.
Yeah, but
But who cares about
next
PE,
year,
right?
Who knows? Can anybody honestly say what they're going to earn next year? No clue. Nobody has an idea.
You've just underpinned all of the fundamental elements of the marketplace.
Yeah, everything
is falling apart around our ears.
With their eyes closed, even if they screw up doing something, they could do that. So it's, I don't know. I think at $19, at $15, I would actually go out and buy I would actually go and buy the stock. I wouldn't even dick around with the options.
There you go. You heard it from Andrew here first. He'd be lured into the underlying. He liked it so much. Getting into Grigus territory there, trading stock. What is that stock stuff?
Yeah. Crazy.
That's because he gets it for no commission.
Yeah, there you go. It's all free. They pay him to buy it over and over.
Right there, your head caves in.
Of course, coming up later this week, there are a couple other big A names. Amazon on the 25th, a name we like to watch, of course, closing down about 6 handles today to 233, almost 234. And, of course, some fruit company that I've never really heard of. Apple, something like that? I'm not familiar with them.
It's orange.
Yes. On the 25th as well, of course. Grigus talked about them. They rallied hard today.
Don't forget about the old Widowmaker on the 23rd.
Oh, yeah, the Widowmaker. That's right. I have that
Our favorite on here.
Lower on my screen. I don't even watch that one. That shows where it's fallen in relevance now. It's lower on my watch list. But you're right, the Widowmaker also coming out today. That, of course, referring to Netflix. And this one that was trading 300 not too long ago, now trading 67, almost 68 today. Let's see what they're pricing in over at the Widowmaker. They're pricing in about a 10-point move going into earnings. So still a substantial amount. You're talking about 15% or so for this weekly straddle. So they're still pricing in some serious movement. I guess their past has been a strong indicator of what Netflix can do with
future movement.
Yeah, if you're out here blasting away at straddles and you're not doing some sort of defined risk trade, you really don't learn from the past.
Actually, I had a client came up with an interesting trade in Netflix. He had like a Christmas tree, like the 65, 62, 60 Christmas tree, which broke even at around $55 on the downside. If things went horribly bad, I think he put on for like $1.50 credit or something. Not a bad trade to pick up Netflix at the the 2-year low or something like that. It was an interestingly priced type of Christmas tree if you're a Netflix gung ho Netflixer.
That's one we don't hear around much anymore. The old Christmas tree. I don't see that one around as much.
Just give you some room. Just give you some room for movement. I don't think I would. If I had to fade Netflix now, I'd think somewhere down the downside. I don't know if I could be too comfortable selling a naked option on the upside. I think the downside feels a little bit. It seems like it's run out of room here in the 50s somewhere. It doesn't quite want to go down below that.
Of the two, I would definitely be less scared from a drop from 60 to 0 than a rally from 60 to 300.
Yeah.
one of those two will leave much more of a mark.
Yes.
But still, yeah.
The tire tracks are much less deep.
Yeah, either way, I don't think I'd be naked on much any of this stuff here. But yeah, maybe it's Iron Fly territory in Netflix again too. I'll have to take a look. I haven't traded this one in a long time, just because it is quite the widowmaker these days. It's no AMD Strangle, I'll give you that. But Netflix, one other one to watch tomorrow. So a lot of stuff going to be lighting up your tape, I think, tomorrow, John. A lot of calls going to be coming in. People putting on their trades on Netflix. People putting on their trades on good old FB. Those two really probably going to be lighting up the old tape. What's the, Apple, you said, is about 20% of your calls. What's Facebook these days?
Complaints or just order entry?
Why did you get me in at 35?
I kid you not. I'm not lying. I'm in my kids' lives. We had somebody come in for the first time last Wednesday and said, hey, on May 18th, I canceled this trade, or I put it as a day order and it didn't fill. And we went back and we looked at what time he placed the trade, and he placed it. It was actually placed on the 19th. I think it IPO'd. No, it was 18th. I'm sorry. IPO'd on a Friday. He placed a trade at like 4:02 on a Friday, and it filled at Monday morning on the open. And we told him that, and he accepted it, and he's like, okay, I understand, and that was it. But I mean, we're talking, 5.5, 6 months later. I figured he just came in and said, hey,
buyer's remorse. I don't want this anymore.
Yeah.
Can I give this back to you? I don't want this FB.
Yeah, but no, I mean, overall, it has gone from, I was just looking at some numbers from Facebook. We did over 1,600 calls that day. We usually do between 800 and 900, about 1,000, 1,100 to 1,200 on expiration. Did 1,600 that day, and the calls, just like the stock, have gone down each and every other day.
It's the peak, and that was it. That's just the hype. See, you had to invest in the mac and cheese, not the Facebook, and you're looking pretty good.
And you're laughing at me. You're laughing at me now when nobody cares about it.
Thank you for that, John, that little Facebook tidbit. And that is going to do it for the old Around the Block segment. But before we go, I want to check in with all of my cohorts on the old All-Star panel to see what they're up to. Starting off with you, Mr. Andrew, beaming in from the great state of Maine. What is coming up in the land of the pit?
That is an excellent question. I
get all this time to get ready.
No idea.
One that deserves an excellent answer.
Of course, let me just throw in for you the November 10th all-day volatility symposium over at the SIBO.
I just couldn't remember. You know why?
All day, Mark
Sebastian. I forget.
That's just nothing better than that. All day, 8 to 5 of Mark Sebastian in your face in person.
A complete day of 80s, a complete and continuous stream of 80s references with Jim Bittman and Jill Malandrino of the Street. And I like how you said, Bittman gave me my introductory seminar at the CBOE in 1992. So when he still had more hair.
Yes. So you've dated both yourself and Jim Bittman at the same time.
Yes,
so well done,
yes.
sir.
That wasn't even my first exchange test. That's the scary part.
So stay tuned for that, fellow listeners.
We have another one to this guy from CTU on money management. Fausto. Anybody that has an Italian name like this, Fausto Pugliese, I got to love. Thursday, October 25th, which is this week.
You'll be appearing with him?
Adjustment. I will not, which of course is why I did not know about this either. 7 p.m. at Option Pit. Go register for free. And this guy's stuff has been pretty popular, so go take a look at it.
Oh, so he's doing a webinar with you guys. Okay.
Correct. So those are the two big things. I will be back in Chicago in mid-December. But right now, no, I'm just writing some new curriculum. We got some kind of cool stuff coming out in that format, trying to get people to learn how to trade options. So
if you're going to be here next week, you can come for the live show.
I know. I saw that note. I'm not, unfortunately. Not till
just sell some,
like 11 to the 14th.
Just sell some of the lobsters and hop on a plane. It'll be good.
Exactly. You can't get any money for lobsters anymore.
That's true.
Although next year we're putting out traps for the first time. My boys are now old enough to lift a lobster trap out of the water. So
there you go. Honest work for good Maine boys. All right. Thank you, Andrew. You may now go about your business, sir.
All right, sir. Adios. You guys have a good day.
All right. And Mr. Grigus, what is coming up in the land of OX?
Well, we had our very successful workshop in Santa Clara last Saturday, where we now staff the OX sales desk on a Saturday. So those guys were really psyched about handling all the influx of calls that we had. I'd like to rub it in. How was Saturday, guys? It was good. Okay. But we're going to roll right into the Boca Raton on December 8th, and that's going to be a overview of the website, Jim Roseanne, Joe Cusick. We have a workshop in Houston. I'm not sure why they got these in backwards order here, but they got these in Houston on December 1st. Jim Roseanne will reveal the power of the OX platform. So we got a couple of live sites coming up in the month of December. I can't believe we're headed into the end of the year already.
I know, it's terrifying.
Yeah, I just can't believe that. So
in a month, we might have a new president. It's going to be holidays soon. It's just the year is just slipping away.
Yeah, I can already hear my son. We haven't got through Halloween yet. He's already talking about starting his Christmas list, and then I make fun of him, and then I go to the store, and they already have their Christmas trees up. So they're not making it easy.
Of course, it is a good time of the year because you can defer all of those present requests. You say, hey, put it on the list for Santa, and they kind of get it. Whereas the rest of the year, you can't really do that in March. But you can get away with that in October, early November, and it works.
Yeah, it's a one line conversation. Oh yeah, Santa's. Yeah, that's great. Put it on the list.
So some good webinars coming up. The Mr. Roseanne showing off the power of OX. Perhaps that will extend, which we're getting a lot of questions on here on the old show. We'll have to dig into some of those in the old mailbag for the next episode. So stay tuned for that, listeners. And of course, we want to thank all of you for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.